Our guest right now is a top executive at one of today's biggest movers. On an otherwise lackluster day, well, we're seeing some selling, but this is one that really stands out. City Telecom HK was up over 10% at one point, actually up about 10% as we speak. It's the second biggest broadband provider in Hong Kong today, and CFO NiQ Lai is here now to share his plan for making it even bigger. Nick, great to have you here with Matt and me.
Thank you. Great to be here.
Your stock is moving a lot. You've had a great year. It's up about 50%. What's out there? Talk to us a little bit about the growth that you think justifies the moves we're seeing not only today, but really this year.
Happy to. Well, basically, we executed on the promises that we offered at the beginning of the year. We are the fastest growing broadband service provider in Hong Kong. We took 93% of the net new growth during the year.
I wonder about the pricing. It's very interesting because it's so cheap, right?
Yes.
I mean, $26 for your triple play services is amazing compared to the $187 that I pay here in New York. How do you offer it so cheaply, I wonder, first? And then also, how do you go from there to a higher price without driving customers away?
Well, the key is Hong Kong's density. We have 16,000 people per square mile in Hong Kong versus 80 in the States. Because of this density, our cost per home pass is about 1/7 of Verizon Fios. So we can afford to charge 1/3 the price and still be very profitable.
But you have raised prices, right? Because it was $13 last year. Now you're looking at $26. How do you continue to up that without scaring off customers?
Well, it's stickiness. We're offering a gig to the home. That's 1,000 megabits. I don't think you can get that speed in the States for $26 a month.
But is part of the strategy to continue raising prices? Like in a year from now, will it be up another 100% or so, or what?
Yes, we're going to push prices up. But the key to our business strategy is that we build the fattest, dumbest pipes in town. And it's like and then it's a very sticky service. So then we charge a monopoly rate on it. So we embrace over-the-top content providers like Google, YouTube, Netflix, and we want to fill up the pipe and then charge a monopoly rate on it. So it's a very simple business plan.
What about expansion? I mean, investors love the stock. Hong Kong's obviously very dense, as you just pointed out, but I would assume you want to move past those borders at some point.
Actually, for now, we keep looking at new opportunities, but for now, we're very happy focusing and executing on the business plan.
So no plans to move then to the mainland?
No plans.
You know, I got to go back to prices, though, because, I mean, I think it's a good point, because I think about that's the sticking point here in the United States, and that's where you kind of need to be competitive. I mean, but you still see that you have a lot more room to grow on the price side of the equation.
Indeed. It's a very sticky service. We have less than 1% churn per month. That's about half the U.S. churn rates. So once a customer has become addicted to our service, it's very hard for them to leave.
Who's your biggest, who do you keep an eye on, though, in terms of competition? Or do you not really, you don't sound worried, you sound pretty confident, but who do you keep an eye on?
We do look at competition, but we do look at the global best practices around the world. So what we're seeing is the wind behind us right now. You know, with the falling prices of large screen 3D high definition TV, we think that's going to be a big bandwidth eater, and that plays into our strength.
All right, we're going to leave there. Hey, Nick, thank you so much. Appreciate it. NiQ Lai, everybody.
We are